I know. You're probably saying there is no way I can afford a house. With inflation the way it's going, I can't save money. House prices are at the highest level we've seen in years and years and maybe forever, and mortgage rates that are at decade highs. So how can you possibly afford a house in 2023? Well, that's our topic for today. So my name is Dan Free. I do this report every day to teach you guys the economics and the fundamentals behind real estate. So in today's video, we want to go over the top 5 products that I've chosen, basically. Breaking them down is what is the best program for you guys to use to help bring housing affordability in line or as best as we can in today's market. So we're going to go over the top 5 products, but before we do that, what I want to go over is the side section right through here that might just give you a little confusion. So I want to define all these pieces right here, and then we're going to break down the programs individually to see maybe what you qualify for, or do any of these work for you and allow you to get into a house in 2023. So the first thing we're going to do is look at the sidelines. Right through here, we look at the credit applied toward your down payment. Basically, this is saying, are you getting any credits that we could get for you to help you with that down payment burden? So in the Home One Plus, you can see you're going to get 2%. The Purchase Plus, you're going to get $5,200, and it goes across the board. So we're going to go in those in more detail. But let's go to the next level. Loan level price adjustments. So what are those? And you can see right through here, there's no mortgage or no investor LLPAs, no investor LLPs, and it goes all the way across. Well, basically what LLPAs are this. Remember recently there were videos all over the place saying, well, the Biden administration are hurting people with great credit because they're going to get higher interest rates now. Well, that was just a little pocket of LLPAs. So what LLPAs are, they're loan level price adjustments that investors or lenders or banks add to the rates because of things such as you have a lower credit score. So if the lower your credit score, usually the higher the rate. Is it a single family home or a 2-unit or a 3-unit? Or a 4-unit? Is it a condo? Is it an investment property? So every little factor might affect your mortgage rate. Well, in this categories, if you see all the way across the board, those don't come into play in any of these programs. Okay, so the next thing we're going to look at is mortgage insurance. Now, mortgage insurance is required usually when you don't put down 20% when you're purchasing your first house. You'll need what's called PMI. However, if you get an FHA loan, you need PMI no matter what, even if you put down 50%. So we're going to dissect some of the programs that might even possibly eliminate that PMI, saving you tons of money. Well, there is a product up here that does such that. The next thing is area median income. So what these programs why they were created was to help lower to middle income families get into home ownership, participate in the American dream. So when they're putting these programs together, what they do is they come up with maps for every area, and then they have a median income for that area, such as, let's say, for example, Southern California. They have a different median income than Iowa. Okay, so because of the logistics behind everything and everything else. So I'm going to also show you some charts, and I'm going to give you a link on where you could go to look to see if your income qualifies you for any of these programs. Location. Well, if you go across the board on these as well, you can look at available anywhere, available anywhere, available anywhere, and then there's one that pops out, and that's the Purchase Plus program. It's available in specific areas. There's 6 of them. I'm going to go through the maps with you on this and show you the areas that if you live in there now, no matter where you buy a house in the United States, as long as you reside currently in these areas, you're going to get up to $5,250 in credits, no matter where you buy anywhere else in the United States. Fantastic program. Bet you didn't know about that one. Must you be a first-time home buyer? If you go across the board, most of those are saying no, and we're going to dissect, like I said, each one individually. Homeowners education or home buyers education, some and most require some educational classes. It's not like if you fail it, you can't buy a house. It's basically just to educate you on economics and home ownership. It's a fantastic program. The next thing is minimum FICO. What your FICO is, if you don't know, most people do know, but your FICO score is basically your credit score. So in most cases, if you look right across the board, you're going to see 620s all the way across over to the FHA program. FHA will allow loans down to a 580 credit score. LTV. Now, this is the area that kind of confuses a lot of people. What your loan to value is this. It's the loan amount divided by your house's value. Okay, so in most cases, if you look right across the screen, you're going to see 97, 97, 97. So that means we're going to finance 97% of the house's value, meaning you're going to need 3% down. So that's what the LTV means. CLTV, we're going to skip that for now. Maximum loan size. Only one of them has a maximum loan size. All the rest of the programs go off of the conforming loan limits, which I'll have the link down below on that as well. But the ONE+ program is capped out at a $350,000 loan amount. So you can buy a little bit higher than that, but we can't do a loan of over $350,000. So let's dissect and really break down this. Let's dig into the puzzle here a little bit. Let's dive in. The ONE+ program, let's just break it down. This is the number one by far program that I recommend to everybody out there, if you qualify. What it is it couples with the Home Ready program. And if you look down through here, the Home Ready program requires that you can only go to 97% loan to value. You see that right here. So that means you need 3% of a down payment. Well, the good news in this program, we're going to give you 2% of the 3%. So you're going to get basically free money. 2 of that 3% is going to be gifted to you. There's no taxes due on that. There's no payments due on that. You walk away from the closing and it is virtually free money. Okay. Now, the one piece of this puzzle that most people aren't getting is there's no PMI on this thing. Okay. There's no mortgage insurance right here. Let me show you how much this could possibly save you. So let's go over to a mortgage calculator. And in this criteria, we put in, we're buying a $350,000 house. We're putting down 3%. Remember, we have to put down 3% for these programs because we can finance 97%. That means we got $10,500 as a down payment, okay? Well, remember, we're going to give you 2 of these 3%. So you're only going to need 1%, which equates out to what? $3,500. Okay, so let's change that back to 3%. Here's what I want to show you. Here's one of the biggest pieces or the biggest benefits of this product. Look through here, right through here. This comes up, this is what your mortgage payment would be, and this includes your principal and interest, your taxes, your homeowner's insurance, and what's called mortgage insurance. See that number, $297? Well, under the HOME1 program, this is eliminated, completely eliminated. So just by getting into this program, you're going to save or reduce your monthly payment almost $300 a month. That is the biggest perk of this program. Okay, so let's move over to the next one. The next one is the Purchase Plus. The Purchase Plus is available in 6 metropolitan areas throughout the country. Those are right through here. And the areas that they're in question here are Atlanta, Georgia, Baltimore, Maryland, Chicago, Detroit, Memphis, and Philadelphia. Okay, if you're in any of those areas, what I would highly suggest you do, reach out to us because we could see if you qualify under this program. It doesn't matter where you're buying, as long as you currently reside and your application shows that you're in one of these metropolitan areas that we can validate, you're going to qualify for $5,250 in credits no matter where you buy in the United States. And to top it off, you don't have to be a first-time home buyer. Okay, so that's the next program. Then we start moving down the food chain a little bit. So the next one we're going to look at is the Borrow Smart. This program gives you a little bit of money, and it also comes with fantastic rates. So this, you'll get a grant between $500 and $1,500 if you had qualified income. And basically the rest of the criteria is almost identically the same as these other 2 programs. Other than, like I said, you have to be careful in regards to the areas you're looking. Like the Purchase Plus is only available in those 6 areas that I showed you. And the ONE+ is only available on loans up to $350,000. So these other programs start getting a little bit looser. So if you do not fit these top 2 programs, then you can fit in any of these other areas on the side. So let's get to the next one. The next one is, there's 2 entities out there, and they're called Fannie Mae and Freddie Mac. Okay, you don't need to know who these entities are, but they do probably 80-85% of all the loans in the country. It doesn't matter if you use me or any other lender or bank to get a mortgage. We all use Fannie and Freddie when we're trying to get your loan approved. Okay, they each have their own, I guess, unique first-time homebuyer program. What is it? Well, in its simplest forms, both these programs will allow you to only put down 3% when you're buying your first house. In most cases, it's 5%. So by using the Home Ready or HOME+ program, you're going to only be required to put down 3%. And then trailing on the edge of this whole thing is FHA. Now, FHA, the reason why it's all the way last, it requires that you put down 3.5%, but it has much looser guidelines to get you to qualify than all the other programs that I listed on the side. So I hope you find value in these videos. And if you do, all I ask you to do is please give me a thumbs up and subscribe down below. But let's dig in a little further to some of this information. So what I want to go through with you guys is we went over the mapping system, but also down below, I'm going to leave a link to where you can look at to see if you fit the Fannie Mae or Freddie Mac's median area income. So all those tools will be down there below. And then we also have this that we're working on. We're working behind the scenes to try to come up with a widget that we can add to our website that allows you to do this. You can plug in all your criteria, and then once you hit submit, it's going to kick you all the way back to here and say which program you fit into and why. So that's what we offer. We're working on behind the scenes. But in the meantime, while we're looking at, please reach out to us. How do you do that? Well, the best way to do that is go to therateupdate.com, and here we are. Two best ways to get in touch with us to see if you qualify for any of these programs is one, if you look way over there, you can see our phone number, 844-775-5626, or what I would highly suggest is click the Apply Now button right here. You're on your way, and what will happen is within 24 hours, me or one of my mortgage advisors will be getting with you to figure out what program is best for you and which one do you actually qualify for. So I hope this clarified a lot of the loan products out there, making home affordability maybe a little bit easier for you and your family. So that's it for today, guys. Thank you so much for watching. God bless. Have a fantastic day, and I hope to hear from you. See you next time. Bye-bye.